Ladies and gentlemen, good day, and welcome to the Sky Industries Limited Q3 FY24 results conference call hosted by Kirin Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Chandni Chande from Kirin Advisors. Thank you, and over to you, ma'am.
Thank you. On the behalf of Kirin Advisors, I welcome you all to the conference call of Sky Industries Limited. From management side, we have Mr. Michael Rowrani, Full-time Director and Chief Financial Officer, Ms. Priyal Ruparelia, Company Secretary. Now I hand over the call to Mr. Michael Rowrani. Over to you, sir.
Thank you, madam. Ladies and gentlemen, a very warm welcome to each one of you as we gather for the conference call of Sky Industries Limited, where we aim to delve into the exceptional performance during the Q3 FY24. Before we delve into the specifics of Q3 FY24, please allow me to provide a very concise overview of our company. Sky Industries Limited has proudly stood as a premier hook and loop manufacturer and exporter in India since its inception in 1994. With over 30 years of industry expertise, we have earned recognition as specialists in delivering customized hook and loop fastening solutions. As a trusted supplier, our global reach extends to more than 10 countries and serving more than 38 diverse industries. We have manufacturing facilities in Navi Mumbai and Bhiwandi, and apart from the main product of hook and loop tape fasteners, we also offer value-added offerings like self-adhesive tapes, webbings, neoprene, velvet, functional elastics, etc. Beyond our products, Sky Industries Limited plays a pivotal role in BIS committee, contributing to the establishment of standards of hook and loop tape fasteners in India. Our commitment to excellence has been acknowledged with highest exporter award by SRTPC in past, which is under the Ministry of Textiles. Furthermore, we carry certifications like ISO, IATF, OCOTEX, etc., which underscore or underline our ability and dedication to the quality and compliances. In FY23, the company achieved a total income of 75.24 crores, EBITDA at 5.60 crores, and net profit of 1.77 crore. Coming to the Q3 FY24, it's evident that Sky has showcased remarkable resilience and strategic prowess. In Q3 FY24, the company's total revenue witnessed a substantial upswing, reaching 20.28 crores, demonstrating its adaptability in ever-changing business environment. With EBITDA steady at around 2.38 crores and EBITDA margin of around 11.75%, it underscores company's operational efficiency. The noteworthy surge in net profit to 1.22 crores with a net profit margin of 6.03% further emphasizes our financial strength and sound decision making. The positive trajectory extends to earning per share, climbing from minus 0.4 in Q3 FY23 to 1.55 in Q3 FY24. Looking ahead to the upcoming quarter, Sky Industries Limited optimistic outlook is grounded in its strong Q3 performance and strategic initiatives geared towards industry prominence. The company's consistent growth and financial stability position it favorably for continued success in dynamic market landscape. Before we delve into the question and answer session, I want to express my sincere gratitude to all the stakeholders for being an integral part of our growth journey. Your support and involvement have played a crucial role in our success, and we genuinely appreciate your valuable contribution. With this, I would like to open the floor for questions and answers. Thank you once again for your presence and continued support.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Pritesh Vora from Mission Street, India. Please go ahead.
Hello, sir. Can you hear me?
Sorry to interrupt, Mr. Vora. May I request you to use your handset, please?
I'm using headset only.
So your audio is slightly muffled, sir.
How do you now? Now
Yes,
it's okay?
sir. Now go ahead.
Okay. So my question is to understand your product profile. What exactly you do? What is the industry market size where you operate? And what is the capability to scale in this business to the maximum? What kind of capital expenditure and working capital requirement you may require in this industry? If we can address these three questions, then I'll have a follow-up. Thank you.
Okay. Can I answer those right now?
Yes.
Yeah. Okay. We are into manufacturing of technical textiles, primarily hook and loop tail fasteners. The primary application of this product is for fastening, and it goes into footwear, automobile, orthopedic, home furnishings, etc. We also offer a lot of value additions along with this product, which are like self-adhesive tapes, or shapes, or different dots, etc. Apart from that, allied products also are being offered by us. As far as hook and loop industry is concerned, the market size domestically would be around 200 crores roughly, and internationally, of course, it is much larger. And as far as the scalability is concerned, though presently we may be having a major segment of the major market share of the premium segment, but as far as scalability is concerned, on global level, there is a huge scope for expansion. As far as the working capital requirements and the capital requirements are concerned, if we intend to expand, working capital is very like normal. Maybe you can consider it as 2 months cycle, as a 2-month cycle, and the capital expenditure, if we set up a greenfield project to start with, it would cost roughly around 30 crores to start with.
Sorry, greenfield project you are saying how much?
Around 30 crores is what you require, roughly, depending on the location and what size you want to put. But initial, you can say around 30 crores is the capex you can project.
So you said 2 months of working capital cycle, right?
Yeah.
Yeah. So what sort of margin, EBITDA margin you earn in this?
See, presently we are.
Suppose you do 100 crore revenue, what is the EBITDA margin you can do?
If we do 100 crores at present rate, what we are doing, EBITDA margin could be around 7.5 CR easily.
So 7% you are saying?
7% is what we have done. I mean, it depends again on the value-added products, because there are various different products where the margins could be better. So it can go up to 8-9% as well, depending on the product mix.
So your business is not self-funded. I mean, if you want to increase your revenue to 100 crore, for example, right, that will require 60 days of receivables, right? That's roughly 16-17 crore.
Yeah.
16-17 crore additional working capital you require, and your margin is only 7%. So your EBITDA on incremental business, if you want to talk about, suppose you want to grab a 100 crore business tomorrow.
Okay.
I'm not talking about the present business. On 100 crore business, you will do a 16% you need working capital. So 16 crore of working capital you need, but you make EBITDA is only 7 crore. So you will always be in a constant need of getting money to run the business in terms of working capital.
I'll just put in a different
here or?
No, I'll just put when we are looking at export market in future, when the scalability side, so in export the working capital cycle is much shorter. What we are talking is of in export we generally get a good amount of advance. A minimum 30% advance is available, and 70 is immediate payment. Usually, these are the payment terms.
Okay.
So there, the working capital cycle won't be, extended to 2 months. It will be much shorter, like.
Right. And what percent of revenue is coming from export?
Presently, it is around 18%, but going forward, that percentage will be higher.
But still you'll have a large mismatch of about fund, whatever you generate, because your margins are too low. What exactly you do? Why is margin so low?
No, for margin improvements, we are working out, we are taking some strategic decisions, and maybe we may move to a low-cost manufacturing location in future. These are things which are under pipeline, that these are the initiatives which will help us to strengthen the margins.
Okay. All right. I'll come back in the queue. Thank you.
Done. Thank you.
Thank you. Our next question is from the line of Yashwanti from Contingencies. Please go ahead.
Hello.
Yes,
Hi,
ma'am. Please go
Yashwanti.
ahead.
Yes, sir. Please excuse me if this question has been asked earlier because there was no clear connection coming up. I just wanted to know, sir, you have one one plant at Navi Mumbai and one is at Bhiwandi. So what are the reasons for having plants at two different locations? And in future, are you looking to consolidate these facilities?
Yes, definitely we are looking to consolidate the facilities in future. The present setup is basically New Bombay. We all know that the land is very scarce. I mean, nearby a factory, hardly any land is available for any expansion or anything. So maybe we may have to scout for a place wherein it can accommodate both the units in future. But definitely, when we talk of the previous question of Mr. Pritesh, where we are talking of strengthening the margins and also all these initiatives, clubbing the manufacturing units and all will all definitely help to reduce the overheads.
Okay. And so should we consider that the next, maybe the shift is towards the Bhiwandi side?
We are not very sure as of now, but we may be looking towards Gujarat or something. Something we are trying to work out, but nothing is finalized yet.
Okay. But at Gujarat calls out for the proximity to all the industries which you supplies.
Yes.
Okay. And sir, just wanted to understand, like, what are your current capacities and how is the utilization levels currently going on?
I think currently we may be utilizing around 60 to 70% of our capacities. Plus the valued products what we are having, we don't have any defined capacities. It depends on a lot of other factors. So you can say the capacity is there for valued products. But for hook and loop, maybe 60-70% is what we are currently utilizing. But of course, there is a further scope for expansion. And when we look at global markets, what we are targeting in future, then definitely the capacity utilization would be better, definitely.
Okay. So two questions for that. One is saying that how is our order book? Can we define ourselves in terms of the order book? And second is, if we're targeting the international market, which countries you look the potential for our business?
Correct. I'll answer both one by one. We are, just to understand our industry better, we are into something called as the accessory industry, like how button is to a shirt. So like that, we are accessory to some industries, the footwear or orthopedic or home furnishings. So usually our order books are not very long. I mean, I don't have an order book which will be more than 1 month because naturally the main usage of footwear, the footwear player will not wait for more than 1 month for a small accessory. Okay, so my order books are usually between 20 days to 30 days on an average. And as far as your other thing is concerned about exports, we presently are exporting a lot to US and Europe, and we still think that those two countries have enough potential to help us grow further. Over and above that, we are also looking at South American and other Asian markets.
Okay. So there we will be having more marketing tie-ups and the production will happen in India, right, sir?
Yes.
Okay. Chorus, there's a lot of disturbance, so can you please manage? We are not able to hear from the management.
Okay, ma'am, we'll check on that.
Yeah.
Thank
Yeah. So basically, our production happens like just in times. Whenever we get an order, maybe of 15 days or 20 days, and then we are in a position to reply. So how the sourcing of the raw material things happens, sir? So we need to store this, keep raw material in inventory for a longer period so as
Yes,
to
yes, yes.
execute the order as and when we get it, or we have facilities of being of proximity to the raw material supply so that we do not have to build an inventory for executing the orders.
No, we do definitely keep a good buffer of raw materials. We have to import raw materials. The yarn which goes into making of hook and loop is usually imported from Taiwan, Vietnam or China.
Okay.
So we definitely will have to plan much in advance. So we based on what our past experiences, we keep that in pipeline. And we always keep some buffer stock for raw materials. And that is why my working capital cycle in the earlier question, it extended to 2 months was primarily because of this reason also.
Okay. So just wanted to understand, as we are basically a leader in the textile segment after China. So is it that this is in cost efficiency causes to import it from Taiwan and other countries, or how is the scene at India for the yarn requirement of your need?
No, the yarn what is supplied by Taiwanese or Vietnamese manufacturers is basically their suppliers to the hook and loop manufacturers all over the world. That is one thing. Second thing, India, these are specialized yarn. These are not the normal yarns. So there are very few manufacturers in India. But again, to make a quality product, the yarn has to be consistent. So we definitely get a quality and specialty yarn from Taiwan or Vietnam or China.
Okay. And if I may ask yes, sir, please
Okay.
go ahead. Yes, sir, please go ahead.
Of course, when you question about the cost, of course, we may be little bit costly in terms of when we consider the freight cost and all for the yarn. But in terms of other efficiencies, in terms of labor cost, etc., will be much better. So ultimately, we should be in position to compete with the Chinese and Taiwanese players. Of course, China is much better than us in terms of cost, but there are other factors, other considerations also, wherein we are able to compete with them on a global level.
Okay. Okay. And if I ask one more question, what is our import content?
Our import
The
content
percentage of the total raw material, how much is imported?
of the total raw material import content would be around 60 to
Am I audible?
70%. Yeah, around 70% you can say roughly.
Hello, chorus team, am I audible?
Ma'am,
Yeah,
your
you
line
are.
is audible. I would request you to reconnect your line in case you're facing an audio issue. The management's line is clear.
Hello.
Yeah, madam, Yashwanti madam, my percentage of import would be around 70% of my total RM cost. Hello, can you hear me?
Sir, I think there's an issue in the line of the participant. May I request
Okay.
that we move to the next participant, sir?
Okay, no problem.
Thank you. The next question. Before we take the next question, a reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Sachin Gupta from Gupta Family Office. Please go ahead.
Mr. Sachin.
Mr. Sachin Gupta, please go ahead with your question. Mr. Sachin Gupta, your line has been unmuted. May I request you to go ahead with your question?
Yeah. My question is, out of the total revenue, what is our contribution in defense, export, and domestic market?
Yeah, export is around 18%, as I mentioned earlier. In defense, presently, we are around 2 to 3% of our goods go towards defense, but slowly that will increase. And rest all you can consider in the domestic market.
And what will be our focus? We want to increase our focus in defense, export, or domestic market?
No, as far as growth comes, we will have to be focusing all the markets. Of course, there are challenges in each market, but of course, we will be able to overcoming those challenges.
But my question is, our margin is basically more in defense, export, or domestic market?
No, domestic will have better margin, of course, but the growth will come from export. The top line will be driven by exports in future.
And what about defense? Are we
Defense,
focusing in defense?
yeah, we are definitely supplying to defense. We are also registered with a few of the ordnance factories, wherein we are a type of a nominated supplier to defense.
So, but considering existing revenue and potential revenue, so how much which we can increase from existing to potential in defense?
Defense, we can, from present, say 3% odd, we can go up to 6 to 7% in very foreseeable near future. And export, what presently we are at around 18%, that can go up to 25-30% in near future.
And for this, we have existing facility, or we have to increase the facility, or we have to move to new facility?
We can cater to certain extent from the present facilities, but slowly we will be having to expand to cater to the growing demand.
So, but for that, do we need any funding requirement via equity or debt?
Yes, of course, but since things are not finalized, we will be finalizing depending on the project size. Then accordingly we'll decide on the mode of funding, like debt and equity.
But as a director, you must have decided as a board कि भाई we have to raise funds through equity or through debt, or partially debt or partially equity.
Yeah, it could be mix of both. It could be mix of both, or it could be more of debt and less of equity. But it could be mix of both. But going forward, we can decide on that. As of now,
So
we are still in process of identifying the locations and all. So,
have we decided any amount? We have for expansion we need say 30, 40, 50 crore funding, partially in debt and partially in equity.
yeah, no, we have some ballpark figures with us, but I can't. I mean, these are not final figures because unless we finalize the land and the location, these figures won't be having any meaning. We have internal workings that this location, this could be the funding and all. And we are usually like, we do have our internal sources as well as of now. But the exact contour of equity and debt is yet to be decided.
Sir, but my last question is, we have higher margin in defense, footwear, export or domestic market, which are higher margin products for us.
Yeah, more than the segments, you can say there are certain products which will have higher margins. It can go to various segments. Like for example, footwear may have higher margin depending on the product mix what we give. If more of value-added sales are done, obviously it will have better. So in general, but to answer to your question would be domestic would have definitely the better margins than the other sectors what you have mentioned.
And sir, in defense, what we exactly supply?
We supply hook and loop tape fasteners and we supply webbing.
What is the use for defense for this product?
Hook and loop goes into the various overall stands, etc. Webbing also goes into various sacks and all that, rucksack bags and all that.
Okay. Thank you, sir.
Thank you, Mr. Gupta.
Thank you. We have a follow-up question from the line of Yashwanti. Please go ahead.
Yeah, thank you for the opportunity, but the line is still very muffled.
Ma'am, may I request you to use your handset, please? Your audio is not clear, ma'am.
Yeah, I'm using my handset only.
Yes, ma'am. Now it is clear. Please go ahead.
Yeah, I had been asked about this import content of total raw material cost.
Yeah, around 70% is you can consider of the total raw material. Around 70% is imported.
Okay, and with the change, with the volatility in the exchange, you are able to pass it on to your customers?
Yeah, see, we have some sort of natural hedge by virtue of exports. So a great amount of the import exposure is hedged, and some we have left unhedged for the time being. And of course, in past, whenever there has been a larger volatility, we have been able to pass it on to our customers.
Okay. So you might
So
have
we,
explained, but my line got disconnected. So what was your export content? How much your export revenue contribution?
yeah, as of now, it is around 18%.
18. Okay. And in future, you wanted to take it to?
Of course, it would be, go up to 25 to 30% in very foreseeable future.
So if you can just explain me the margin difference between the export orders and the domestic orders.
Madam, for margin, it is depending on the product mix. We have multiple products, but of course, the domestic will have better margins as compared to export, because in export, we are competing with China, primarily in the export market. But certain parameters are there, wherein some customers of US or Europe would definitely want to have a China plus one policy. So there is where we have opportunity.
Okay. So, considering the margin profile, I believe your focus would be in the domestic market going forward.
The growth will be, domestic market will have a limitation to the market size, but export, there is a larger unexplored market size which we can cater to.
Okay. So volume is the export mantra.
Yes, yes.
Okay, sir. Thank you so much for answering me.
Thank you, madam.
Thank you. Our next question is from the line of Jignesh from Jiva Capital. Please go ahead.
Hello, Mr. Jignesh.
Yeah. Hello.
Hello.
Yeah, am I
Mr.
audible?
Jignesh. Yeah, please.
Yeah, so, sir, considering your last 3 to 4 years revenues and also your operating margins, there has been volatility in both. And even I think revenues went down in a couple of years back. So what has been the trend because of utilization of certain sectors? Volumes keep on going up and down in revenues?
Yeah. Okay. Our revenue, again, as I told earlier, that it again depends on a lot of product mix. We normally we would be growing at around 10 to 15% on an average in last 3 to 4 years. The aberration was the COVID year, wherein our turnover has dipped. But apart from that, we have been growing between 7 to 15% overall on an average.
Okay. On volume basis?
I would say more of a value basis. Volume basis, we might have a little lesser growth.
Okay. So volume basis, suppose if we take steady state, we can grow to 8 to 10%.
Yeah, safely we can say that.
Okay. And I think margin also, it has been hovering between 7 to 12%. So what has been
Again, as I told you, it depends on product mix. Supposing some product of ours would fetch a better margin as compared to other products.
Okay.
Again, it is very difficult to predict exact margins because again, it depends on product mix and on how, because we cater to say roughly 38 different industry segments. Now, in an economy, always some industry segments will perform better than other segments. But for us, it is always a comfort that if one industry is slowed down, it will not affect us greatly. At the same time, we may not grow to that extent because our reliance is there on different industry segments.
Okay. So if we want to understand in recent years, your out of total revenues, your top 5 sectors are, I think, footwear, automotive, orthopedics, and home furnishing.
Correct.
So they would consist around 70 to 80% of total revenues?
No, much lesser. Roughly 25 to 30% of the total revenues, the sectors what you mentioned.
Okay. So which is the other 4 to 5 sectors which contribute majorly 40-50%? Any major sectors which I have missed out?
No, there are small sectors like PP is there, then other sectors are there, but which will contribute to 3-4% overall. So we are basically spread evenly over the other sectors.
Okay. And if you see competitive landscape, who are your major peers? Is it in unorganized market majorly?
Yeah, majorly are in unorganized market. We are the only listed company in this segment.
Okay. And size-wise also, any major in same size or all other are smaller players?
No, they would be smaller players. Maybe, see, we are basically focusing more on premium segment. They are focusing more on the economy segment.
Okay. And since now we are focusing on exports in terms of volume growth, so any major competitors that you are most of the time you get competition from that players of China or Taiwan?
We
They are
foresee
much bigger
competition.
in scale?
No, they are much bigger. They are much better in terms of cost also, but there are certain other parameters like quality, and then again, some customers would definitely want an alternative to China. That is where we step in.
Okay, right.
So these are the two major factors. Sorry. Yeah, you were saying something.
Yeah. So now, since we are approaching 1,100 crores of turnover, maybe this or next year, so what is the vision of the company for the next 5 years in terms of revenues and profitability? Broadly, if you can guide us.
Yeah. If in terms of revenue, we can safely, grow at about 15% or so, on an average. That is what we foresee over next 5 years. And in terms of profitability, again, similar growth you can expect.
Okay. So considering 8 to 9% EBITDA margin.
Correct. From that you can expect around every year-on-year 15% growth.
Okay. But so on EBITDA margin, maybe we can expect some growth. But
it depends on a lot of other. Again, it depends on a lot of other factors like supposing.
No, so I was just coming down to the profit margin. Since you mentioned that we might take debt and equity route, so I think a lot of our interest component will increase. So I think PAT margins might not see the consistent increase like revenue growth.
So at the same time, we'll be taking certain strategic initiatives like moving to a lower cost location where the costs are lower and all that. So that should set off the effect of increasing interest costs.
Okay. And all the strategic decisions, how soon, maybe in next 1 or 2 quarters, we will get to learn more of this?
Yes. Definitely next 2 quarters we'll get to know more about this.
Okay. Thank you.
Thank you, Jignesh.
Thank you. Our next question is from the line of Sampath Nayak from Tiger Assets. Please go ahead.
Yeah, hi, sir.
Hi, Sampath ji.
Sorry to interrupt, sir. You're not audible, sir. May I request you to use your handset?
Yeah. Am I audible now?
Yes, sir. Please go ahead.
Yes.
Thank you.
Yeah. Hi, this is Sampath from Tiger Assets. I joined this call a bit late. So, can you repeat what is your vision for the company for next few years?
Definitely, we would want to grow more towards the export market and increase the proportion of exports in the total portfolio. And what I have mentioned earlier is we expect a 10 to 15% growth year on year.
On the revenue front?
Yes.
Okay. And can we see any margin expansion, sir?
Yeah, that depends again on strategic initiatives like moving to a lower cost location, having a better product mix, having tighter controls on the cost, etc.
Okay. So, again, why is this strategic decision to increase export revenue? Because you said domestically we are clocking higher revenue, right?
Domestically, profitability is better. Again, depending on the product mix. Export, the profitability will be lesser, but the market size is much larger.
Okay, sir. Okay. And even even bottom line, we can expect 10 to 15 kind of growth.
Yes, we can expect that. Yeah.
And so, like you said, we might plan to move to a lower cost location, right? Any numbers on capex that we'll be planning, or is it not decided yet?
Roughly we can identify, but not a confirmed figure. So once we decide on the location and once we finalize the location, the land, etc., then maybe we can get more concrete numbers.
Okay, but can you give some ballpark number?
It's difficult to build, but roughly between 30 to 40 crores is the capex what one can look at.
Okay, sir. Okay, sir. Thank you so much.
Thank you. Thank you.
Thank you. The next question is from the line of Kushbu Kaur, who is an investor. Please go ahead.
Hello, Mr. Kuzu.
Hello,
Kushbu Kaur, yes, please go ahead.
can you hear me?
Yes, Kushbu.
Okay. Sir, can you tell me what is your current market penetration and what are the steps in the global market, and what are the steps being taken to further expand the company's global reach and penetrate new markets?
I would not be able to put a number to what penetration we have done as far as numbers are there for the global market, because the market is much bigger.
Okay.
And the applications keep on evolving. But definitely I can tell you what steps we have taken to increase our market share. We have strengthened our export marketing team, and we have started to participate more in international exhibitions. Recently, we have participated in Columbia Tax, which was in Colombia. We are going to participate in more exhibitions, forthcoming exhibitions in Europe as well, Europe, USA. So by being present in exhibitions consistently, and having a better and more people in the export team, getting more touch points with the export customers will definitely help us into export market.
Okay. And sir, how did the performance of manufacturing unit in Navi Mumbai and Bhiwandi compare during the quarters?
Sorry, I didn't get your question. Something got disturbed. Can you please
How
repeat?
did the performance of manufacturing unit in Navi Mumbai and Bhiwandi compare during this quarter?
No, the profitability always depends on the product mix. So this quarter, this particular quarter, the product mix was much better. So obviously the performance as compared to previous quarters has been slightly better.
Okay. And could you give me an outlook for the next quarter in the for the EBITDA margins and the net profit?
EBITDA, we could see similar trends what we have been seeing in the quarter, at least for the next quarter. And net profit, again, similar trend we can expect what we have got.
Okay, sir. Thank you.
Thank you, Kushbu.
Yep.
Thank you. The next question is from the line of Milind Shah from Urmil Research Consultancy. Please go ahead.
Hello.
Hello, Mr. Milind.
How am I? I am speaking to Mr. Michael, sir.
Yes, please go ahead.
Okay, sir. Thank you, sir, for company is going to conduct a con call, and I wish that company is going to conduct every quarter. So we have very long-term investor in company and hope the company is going to grow, be more bigger in future. So I want to understand, please, can you make any presentations before, after the result is declared and before con call, so many customers can understand. And I also request to make a photographs put on our website when we have participating exhibition in international seminar or whatever. So customer can understand the potential of companies, because this is a unique product in listed place.
Correct.
And sir, my question is, what is the import material in our product?
Yeah, we normally have to import the nylon filament yarn.
Okay.
Okay, and as far as the presentations and photographs, etc. is concerned, we'll definitely attempt to get it prepared and share it with the investing community in general. And thank you very much. Thank you very much for faith given to us.
No,
terms of support.
new management has already do a very good product and profit margin improvement after Sanjay sir has taken over the Sky industry. But we hope that we are going to be very big companies in next 5 years.
Definitely, with your support and with all the hard work, we should definitely grow.
Okay, sir. Anytime I am doing a PNS for some time, if or each investor who wants to visit company or any bank management, it is possible to meet?
Yes, yes. It could be possible. We could arrange it maybe at a convenient and suitable time.
Okay, okay. Thank you, sir.
Thank you, Mr. Milian. Thank you.
Okay.
Thank you. The next question is from the line of Vijay Rawat from Vedant Capital. Please go ahead.
Hello, Mr. Rawat.
Mr. Vijay Rawat, your line has been unmuted. Please go ahead with your question. Mr. Vijay Rawat from Vedant Capital, may I request you to go ahead with your question, sir?
Can you hear me?
Yes, sir, we can hear you.
Yes, Mr.
So
Rawat.
my question was, during the call I heard you saying that domestic margins are lower than the export margins. Is that correct?
No, on the contrary, domestic margins are better than export margins, but the growth opportunity in export, the top line can grow better in export as compared to domestic. Domestic will have a limited margin.
That's fine. But normally in other textile companies or maybe other product companies, export margin is always better. So why it is different at our company, sir?
I'll just explain you. Traditionally, Taiwan and China has been the major manufacturers of Hokkien tape fasteners, and China is predominantly present in global market. The capacities are huge, and obviously because of that, the costings are very competitive. So we are competing with them on a global level. When we compete with them on a global level, as compared to our size, maybe they are 10 or 20 times larger than us in terms of the machinery.
Economies of
scale. Obviously, economies of scale plays a major part in the cost. And also in this industry, what makes additional is the backward integration. Like because of certain constraints, like lack of land, etc., lack of space, we may not be able to do much of backward integration. Where over there they have done a lot of backward integration. So going forward, when we do all these things, this will help us be more cost conscious.
Okay. And what kind of backward integration is there, sir, in this industry?
Here there are two major backward integration what one can think of are the yarn what we procure basically has to be twisted. So one is twisting can be done as a backward integration, and there is a monofilament which is nothing but a extruded yarn. So we can think of monofilament extrusion, which could be a backward integration, because there the packing cost itself is a significant portion of the total cost. So we could probably save on that.
Okay. So if you are able to achieve both these integrations, what could be the margin increase?
I can say roughly.
Approximately.
Yeah. On the EBITDA level, it could result to 0.5% or so.
So it is very less actually, even after backward integration.
No, I mean,
0.5.
Yeah. 5% on a total base, you can say it will be over the total cost, it will contribute significantly.
Okay. Just a minute. Last year, your margins were near about 7 to 8%, right?
Correct.
So you are saying if you are able to achieve these backward integration, your margin will increase only by 0.5%.
Yeah.
Okay, right. And second question, sir. Next question is, you said 30 to 40 crore capex. So in how many years you would be requiring that capex, or you would be executing that?
Roughly a time frame of 3 years.
Okay, in 3 years. And if you execute that in 3 years, what could be the revenue from that fresh capex?
Okay. The revenue from the fresh capex, the incremental revenue would be another 30 to 40 crores in the first year, and maybe again growing year on year around 15% on the overall things. Because we intend to move to a totally greenfield project to a newer location.
Okay. Right. And what is the revenue guidance for FY25 and FY26, sir?
Approximately, you can say 15% growth is what we could normally expect based on our industry standards and all. Roughly, safely, we can say around 15% we can grow like.
Okay. Right, sir. Thank you so much.
Thank you, Mr. Rawat.
Thank you. Our next question is from the line of Ritika Jain, who is from HNI Investments. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, what will be the industry growth drivers going forward? And what is the outlook for the demand in hook and loop fastening solution market, both domestically and internationally?
Okay. Ritika, it is very difficult to project on international level because there are various applications and various avenues available for expansion. But domestically, I can give you more better figures. Domestically, the present market size is around 200 crores, which usually grows on an average of 10 to 12% or 10 to 15%. And the growth drivers are basically newer applications or more innovative applications or more customized applications in terms of fastening. So that are the industry drivers.
Okay, sir. Okay, got it. And what are the key competitive advantages or unique selling points of the company?
Okay. We are basically known for our customized and quality products. We offer solutions in terms of fastening. So if anybody needs any fastening solutions in terms of technical textiles or hook and loop tape fasteners, definitely they would get some solution from our side. We have a strong R&D which aids us in this particular thing.
Okay, sir. Okay, yeah.
Okay, thank you.
And what are your company's goal and objectives for the next 3-5 years?
Madam, of course, to definitely create value for the shareholders and to be a major player on the global market.
Okay, sir. And sir, what will be the required capex plan for next 3 to 5 years?
As I mentioned earlier, it could be in range of 30 to 40 crores over next 2 to 3 years. More than that, we are yet to, firm up our plans for further expansion.
Okay, sir. Got it. Thank you so much, sir.
Thank you, Ritika.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Riya Sen from Investor. Please go ahead.
Good afternoon, sir.
Good afternoon, Riya.
Thank you for the opportunity. So what is the working capital cycle?
The working capital cycle presently. Yeah. The working capital cycle, you can say traditionally we have been operating on a roughly 2-month working capital cycle on an average.
Okay. And can you discuss any recent achievements or awards received by the company?
Recent achievements. Okay. Basically, achievements basically we are in the committee of BIS as of now, wherein we are one of the players who have been invited by the government to set up the hook and loop standards in India. And apart from that, certifications, we are right now in process of GRS certification. We already have Ocotex and other certifications.
Okay. Achha. What are the future growth strategies?
Of course, definitely make a competitive offering and grow in the global market.
Okay. So what's the outlook on EBITDA margin and strategies to improve it further?
EBITDA, as I said, we can grow roughly 10 to 15% year on year. And the strategies would be to definitely strengthen the margin by a little bit of backward integration, little bit of moving to a better location, which is favoring in terms of cost, etc.
Okay, sir. Thank you, sir. I'm done with it. and all the best. Thank you.
Thank you very much. Thank you.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. Our next question is from the line of Ashok Shah from LFC Securities. Please go ahead.
Hello.
Hello, Ashok Shah ji.
Yes. Thanks for taking my questions. Sir, are we doing something for supply of the bulletproof jacket to defense sector in India?
Yes, we do.
Sir, how you do? So, do you make a jacket or are you having plan to make a jacket and supply fully jackets to defense sector?
See, basically, we make technical textiles. So we make hook and loop and the webbings, which basically go into the jackets. So the basic tender is obtained by some companies which are basically they get the tenders, and in the tenders there are certain specifications for hook and loop and webbings which we normally meet, and they in turn buy from us, and then that jackets are supplied to the defense.
But are you directly registered with the defense?
Yeah, with ordnance factories and all, yes, we are registered. But the product, they recommend that the hook and loop what is to be used in their product should be from Sky and up to certain these standards.
Do you make anything for the defense factory for while using your whatever hook and loop and everything, so to the safeguard the ordnance materials and everything? So
no, I'll explain you. We are into something called as accessory. So basically there will be a jacket which requires an accessory, like how in a shirt you have a button as an accessory or a collar as an accessory.
Okay.
So basically we will be supplying to them. We are nominated by ordnance factories, and so we meet their quality parameters.
Sir, you told about capex of around 30 to 40 crore over next 2 years. So would it be financed via fundraise or equity raise, or it will be done from the internal accruals?
Yeah, partly it's going to be from internal accruals, and partly it is going to be from debt. But the final contour, once we finalize the location, etc., that time it will be more finalized, like what would be the ratio of debt and equity.
So this expansion will be done when we move from our present location in Maharashtra to, I think, maybe Gujarat or something like that.
Correct.
So what will be approximate capex or in the first new factory, or you would be required to only land and only move the machine from here to there?
Yes, ideally it will be that way. We get the land, have a construction done for the buildings, factory building. Get some new machines which will be basically enhance our capacity, as well as move a few machines from here. But that again depends on how we are proceeding forward. But this is the overall plan.
But do we have any requirement for this expansion so we can do the production and sales from the new factory fully in India itself? Demand is there?
Yeah. The demand, of course, in India there will be limited demand domestically, but the global demand is definitely there.
So our sales can increase after expansion to what extent?
I gave the figures, roughly say 30 to 40 crores we can enhance, we can expand over a period of 2 to 3 years, additional over and above what we are currently doing.
Okay. Thank you, sir. Thank you. That's all from my side. Yeah.
Thank you, Ashokji.
Thank you. Our next question is from the line of Sachit Gupta from Gupta Family Office. Please go ahead.
Sir, my question is, sir, if he shift from Navi Mumbai to Gujarat, so what is the value of our Navi Mumbai plant? If we sell Navi Mumbai plant, instead of raising fund, we can utilize that fund for Gujarat plants.
Yes, we can definitely do. The present valuation of the New Bombay property would be in range of 23 to 26 crores. In that range, you can expect.
And,
so if needed, that is a fallback option.
And sir, secondly, why we are not focusing on defense? As you said, our defense ratio to the sale is less than 5%.
Correct.
So why we are not focusing more on defense? As per current government policy, they are more focusing on defense. So if we can increase our share in defense, our revenue can be higher than our
Correct.
expectation.
Correct. See, as compared to previous year, this year's our contribution to defense has increased. Okay, I can definitely tell that the focus is definitely there to increase in defense, but then there are certain limitations. There are certain limitation in terms of their procurement process. So we have to overcome that the hurdles and then can get better and better. But of course, the efforts are always there to increase the defense procurement. Hello.
Okay, sir. Thank you.
Yeah. Thank you, Sachin.
Thank you. Ladies and gentlemen, that was the last question for today. As there are no further questions from the participants, I now hand the conference over to Ms. Chandni Chande from Kirin Advisors for closing comments. Thank you, and over to you.
Thank you everyone for joining the conference call of Sky Industries Limited. If you have any queries, you can write to us at research@kirinadvisors.com. Once again, thank you for joining the conference.
Thank you, everybody. Thank you for being participant in the conference call. Thank you so much.
Thank you. On
Thank
behalf
you.
of Kirin Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.